Hey, it's Nicole Johnson with CoVision Real Estate Group, and today's most frequently asked mortgage note question is, why on earth would a borrower pay an 8% all the way up to a 10%, sometimes 11 or 12% interest rate on a loan? And that's actually a really great question. Like I mentioned in my last video, these aren't your common government-backed Fannie Mae, Freddie Mac loans from these big banking institutions. A lot of these loans are originated one through a seller finance. So there's a farmer, say he's a farmer, he owns lots of land, and his neighbor wants to buy a piece of that land, but his neighbor can't get a loan or doesn't want to get a loan, or the bank doesn't want to lend to him because it's only $50,000. So that farmer says, hey neighbor, I'll sell you this piece of land right here. I'll carry it for you. So let's do, put 5% down and I'll give you a 10% interest rate, and then you just pay me your monthly payments. That's how a lot of these loans get originated. And then that farmer is like, you know what, I really want my money back. The borrower still can't get a loan or just can't come up with the cash. And so that seller can go and sell his piece of paper, sell his mortgage note to somebody else. And then that neighbor now starts making their payments to the new owner of the mortgage note. That's how all of this works. And so why somebody would pay an 8 to 10% return is that these aren't your common government backed loans. Yes, they're secured against the property. Yes, it's totally legal to do this. But they're kind of your non-traditional buyer. Maybe they don't have the best credit score, or they don't have the most amount of money down, or it just might be an oddball piece of property like land that a bank just doesn't want to lend on, so they have to come up with some creative financing. Typically, creative financing commands a higher interest rate because you've got to balance out that risk. So it's not like these borrowers are terrible borrowers with 200 below credit score, but they're just kind of your off the beaten path borrowers, as well as off the beaten path types of properties. Like I said, it might be a land note that a bank just isn't interested in lending in. And so with that combination, in order to help mitigate that risk, you tend to have a higher interest rate. That's just what happens with this type of process. So if it's not your typical government-backed loan, it's an oddball property, you're going to pay a premium for that. That's very common in real estate investing and in lending. So I hope that eases your questions or concerns, or if it brings up more questions, shoot them my way. I would love to answer them for you. As always, thanks for watching. If you want a mortgage note guide, I would love to get this in your hands, and Marcus and I would love to meet up with you, whether it's Zoom or coffee or lunch or just a phone call, whatever. We would love to share more information and see if you're ready to get started investing with us. So have a great day. Take care. Thanks for watching.